So there are countless strategies out there, all using different concepts, and to be honest, it can feel quite overwhelming. And after dedicating hours and years of my time, I finally found a three-step strategy in which I now use every single day to pull multiple figures from the market. So in this video, I'm going to tell you why you should use this strategy. I'm also going to show you how you can use the strategy, and I'm going to provide a full cheat sheet so that you can take that away and use it for yourself from today. Okay, so firstly we have to understand why and how this strategy is so simple. Now, firstly, there's no bias required. So a lot of the times a daily bias causes a lot of discrepancies between people because everybody views the market differently. So luckily for us, this strategy doesn't require a bias. Secondly, it's mechanical steps. So the three steps that I'm going to show you are completely mechanical. They don't have any discrepancies. What's happening on the chart is what's happening. And if these steps tick, you enter the trade. And thirdly, it's just beginner friendly, so anyone can do it. I mean, I've taught countless students how to use this strategy, and within 2 weeks, they're already implemented it themselves and making money. So, with that being said, what do we need to look for? So, the first thing that we need to look out for is higher time frame PD arrays. And the only thing that you have to understand for this strategy to work is market cycles. Now, market cycles and liquidity do go hand in hand, and the way I like to see it is there's two types of liquidity. So you've got internal and then you've got external. Now, external liquidity is considered highs and lows of sessions, previous daily highs and lows, so all you have to do is just mark them out with lines. And then internal liquidity is things such as new week opening gaps, fair value gaps, imbalances, whatever you want to call them. So we need to just look out for these two things, and the only rule that we need to remember is that the market cycle is it takes internal and then it goes to external, and then it cycles back to internal and then again external liquidity. So that is how the market moves. Firstly, it enters into a internal area of liquidity, and then the next target that it has is external. So this is how I use my daily bias in a sense. So yeah, step one, we wait for either an external bit of liquidity to be swept or an internal bit of liquidity to be tapped into, and it can work off both of these. Secondly, what we're going to wait for is once we've had a tap, we want to now see a confirmation, and for this I'm going to use a 5-minute and a 15-minute market structure shift. Now this can be known as a change of character, it can be known as a CISD, whatever you know it as. We just want to see a reversal off this particular area. And then the third and the final step is a OTE or a fair value gap entry. Now, a lot of people in the industry are saying about this alpha decay and that strategies don't work after a while, but if your concepts are strong enough and they've worked for years and years apart, it's hard to say that a strategy is decaying over time, because although the market does adapt to different conditions, it is very easy to adapt to these yourself and implement different things for this strategy. So for me, I use one of the two of these entry models within each trade, depending on how it's looking. So these are the steps that we use for the strategy. So it is super simple. It's literally tap into a higher time frame PD array, wait for a shift in market structure to the opposing side, and then we have an OTE entry. And all we're doing after this is we're targeting a simple 1 to 2 risk to reward. Okay, so now you know all of the rules and what kind of profit targets we are aiming for. Let me go on the chart and show you all of these confluences playing out and show you some entries. Okay, so I'm now on the chart and I'm going to show you every single entry that I've taken in the past 2 weeks on Euro USD and GBP USD to show you how repeatable this strategy really is. So for the first example here, we actually had an impulse to the upside here on the previous day, and we took out a lot of liquidity resting below, and that's because DXY was dropping quite heavily due to fundamentals. Now, with that being said, we had a correction to the downside, and there was a lot of liquidity resting in this full area here. So all I was waiting for was a significant sweep of all of this liquidity. So that happened here, and we tapped into an order block here. So step one is done. We've swept some external liquidity. From here, we simply just need to wait for a shift in market structure. Now, here alone, we did have a 5-minute shift. But because we were so bullish and our bias, like I say, the bias was clear to see that it's bullish. And I know that we say that we don't use a bias in this strategy, but it is always good to look at the overall market direction. Now, on the 5-minute here, we seem to have had a shift, but I did actually make a video regarding how to use a market structure shift. And for me, I consider this a sweep because we didn't have a solid body close. So if you haven't watched that video already, make sure to go and watch it. It's the previous video on this channel. But yeah, so I wanted to wait for the 15-minute shift, which actually occurred here. So the swing low was here, we pushed up, broke structure, we wobbled around this area, and then we pushed to the downside with momentum. Now, there was two areas here. There was a 15-minute fair value gap here, but the next step of the strategy is to actually pull our fib tool down. So I pulled my fib from the high to the low of this leg, and that left our three levels in play. So we had the 0.618, the 0.7, and the 0.786. Now this is a video that I'm going to make as well soon. I do have a few rules with this Fibonacci tool, but as for this entry, I entered on the 0.7 because at the 0.618, the RR wasn't great and I couldn't clear these highs enough. And then from there, all we simply did was target the nearest internal liquidity, which was down here. We had a nice little fair value gap here, which price drew to, and we did actually sweep through that because there was a bit of news, and then we took out the external liquidity. So I actually caught nearly all of this move. I didn't catch 80, I think I took to this fair value gap. If I can find the entry, I'll put it on the screen now. I actually send all of our entries within our Discord to all of our students so they all catch them as well. But yeah, this was the first entry, so super simple. We rebalanced this whole leg and then we dropped. No daily bias was needed. We literally have been moving to the upside consistently, and we managed to catch a sell position in a bullish market. So the next position, correction to the upside again after this entry, and within Asian range we pushed down. Now I don't trade Asian range. I know there's a lot of movement sometimes, but I don't trade it. So we waited for London, and what we saw here was on this leg which broke structure again, we once again drew the fib tool and marked out the imbalance, and then we entered off the 618, targeting the lows of the session. And again, it was the exact same concepts. External liquidity had been swept. We'd also tapped into some internal liquidity here, and then we targeted the new external liquidity, which was here. Again, we had a sweep of these highs here. So we had a sweep of Asian highs. We had a shift to the downside, and we had a retracement, but for me, it wasn't enough. So I waited for another push down just to confirm that we were going to be dropping. And then instead of entering off the OTE, in which we already tapped, I entered off the fair value gap just to prove that it could be used for both. So you can use the OTE or you can use a fair value gap. This entry here, we tapped into a higher time frame fair value gap again, and we actually had a nice reaction down, changing structure to the downside. So a market structure shift, changing market structure, whatever you want to call it. And then all I was doing was waiting for a retracement back up into this area. Now, I like to use a concept called law of effort, and that basically states that the momentum that we had to, for example, the downside, has to be showing more convection than the momentum we have back up to the upside. So if we have a big push to the downside like this, if I saw a big push to the upside with the same momentum, if not more, I wouldn't consider taking a sell because the momentum to the upside is a lot higher. So in this entry, we had a nice law of effort. We were kind of rejecting this area. We tapped into the fair value gap again, and then I drew my fib leg from the high to the low of this leg because it was the one that shifted structure, and I waited for a tap into the 0.7, and this entry actually ran me 60 pips. So yeah, this is the exact strategy that I use on a day-to-day basis. It is so simple, and it is the strategy that we teach our students how to use. Obviously there's a few more ins and outs that we've found to improve the win rate and refine entries a lot more, but let me just show you the Discord so you can see how many people are taking this strategy seriously. Okay, so this is the Discord, and the students are using this strategy every single day, and in the last week alone, we've had over $74,000 in profit alone just from this strategy itself. So we have people making $4,000, we have people passing their evaluations, nearly $7,000 here on gold. Every single day we are pulling consistent profits. I even requested my own payout using this strategy. But yeah, this is what happens when you have a solid system that you can use every single day to consistently pull profit from the market. So we have people making profits. These just go on and on and on and on. It's crazy. I mean, we also have the Discord here with the certificates. We have people passing the challenges consistently. But yeah, that is the strategy that I use. So I'm not going to sit here and overcomplicate it and tell you all of these different steps, make it a 20-minute long video that you need You can see the strategy here. You can see the results that I've pulled from it. I can show you all of the data that we have. Make sure to click the link in our description to head to our free Discord. There's a free journal in there and our full strategy cheat sheet that I just spoke about at the start of the video so that you can start implementing this strategy today. If you did enjoy this video, please make sure to leave a like and subscribe to the channel. We're putting out loads of free value every single day, and we're providing loads of free resources as well that you can literally get your hands on today and start implementing. So yeah, that's it for this video. I'll see you in the next one. Peace.